With Russia getting slapped with sanctions, what does the country make the most of? Near the top of the list is Platinum Group Metals, and our next guest's company is one of the world's largest primary suppliers outside of Russia. It's Neal Froneman. He is CEO of Sibanye-Stillwater. Neal, always a pleasure.
Yep, same from my side, Michael. Good afternoon.
I want to start with macro. What's the Russia-Ukraine conflict going to do to the Platinum Group metal supply, namely that all-important palladium, Neal?
Yep, and I think that's a very good question. It's not one that has an exact answer at this stage. Let me start off by saying I think we're going to go through a period of volatility. But I think it's also important to note that Russia provides 37% of the world's palladium, and most of that goes to Europe. Now, I think what will probably happen, I think sanctions will bite, even if it's not directly on the specific commodity. I think Norilsk will find it very difficult to get their product to their customers. Their customers will probably be reluctant to take Russian product. And I suspect there will be a bit of reorganizing in terms of that supply probably going to friendly countries, because some of the friendly Russian countries do consume quite a large amount of palladium, which will mean that Europe will probably receive its palladium from other sources, but the supply side will probably come back into balance. But there's going to be volatility. You've already seen it. Speculators speculating on sanctions, speculating on exactly what we're talking about. My biggest concern, though, Michael, is I think we are going to see significant supply chain disruptions, which is going to impact the demand side. You've already seen in Ukraine a lot of wire harnesses are made for vehicles. So Volkswagen, Porsche, BMW have been impacted. They've had to stop production of both battery electric vehicles and internal combustion engine vehicles. There's been supply disruptions in Russia. So the Western companies have stopped their production of vehicles in Russia. So all in all, it's probably going to have more of a negative impact, unfortunately, on the commodity from a demand side. I think demand could well drop off while we go through this reorganization that is clearly going to take place.
Neal, you had a great year end. You had record profits. Your stock is up over 50% year to date. How's cost inflation? We're over $110 a barrel for oil. When could you see this becoming a real concern, or is it just to be good and to be into commodities right now, since you have that linkage between gold and oil?
Yeah. So we've seen cost inflation for some time now. Listen, we've still got very significant margins, so it's not impacting on profitability in a material way yet. But nevertheless, it's a real concern, because what happens is when you have price increases, it's generally very hard to work them out of the system again. They become sort of the new norm. So we've seen rampant inflation in the US. Our Montana operations, a combination of lower volumes and real cost increases, labor shortages have pushed our costs up 18% year on year. In South Africa, we've been a bit more fortunate. We are still benefiting from the synergies of the acquisitions that we made, where we acquired assets that are next door to each other. So we actually saw a 1% reduction in our cost base over a year, but that's very unusual. Every other supplier or miner has shown very substantial inflationary pressures on the cost side. It's not something that we should easily allow to happen, because it does create a new base. It does destroy the natural resources we have, because it becomes more and more difficult to get optimal exploitation of resources. So it's something we're working very hard on. Just for your viewers, I mean, the other big inflationary increase we're seeing in South Africa is, of course, electric power, not too different to oil, and we're an energy intensive business on the electrical side. So we're working very hard to decarbonize, but also to put in renewable energy, which is actually going to be cheaper than the coal-fired energy. But that, of course, comes in a few years' time. So the cost pressures are there. They really are. We're just very fortunate. We've got significant margins at this point in time, around between 50 and 70%, depending on our operations.
Now, you call out South Africa in your financials. You say that it's a carbon-intensive electricity generation. That could prove problematic for the whole mining industry in the country, Neal.
Oh, absolutely, Michael. And I think without fail, every single miner is in South Africa is implementing renewable energy strategies to deal with the dirty electricity that we get, if I could call it that. But also, as you know, we've got a very unreliable power supply in South Africa due to many factors, which I won't go into. But we have no option but to clean up our act and to reduce the cost of energy in South Africa.
Appian Captial Advisory served notice on Sibanye-Stillwater for not closing on that Santa Rita nickel complex deal in Brazil that was announced earlier in 2021. I assume you're constrained on what you can say on this, Neal, but what happens next?
Yeah, so look, I think what we don't want to do is litigate in public. We are very certain of our rights to terminate that contract because of a material adverse change. Most acquisitions have these clauses that if something material happens after you close, you have the right to terminate the transaction. So we've terminated the transaction on the basis that a geotechnical event was material. To be clear, we have not been served with, let me call it, competent notice of a claim. We have swapped letters, and should we be served with the proper formal notice, we'll defend ourselves. We believe we are confident in our position. It's a very unfortunate issue, but you know, we are very disciplined on value, and if there's been a material change in value, we've got to do the right things for our shareholders. So our shareholders back us on this.
I see Sibanye made a lot of deals in 2021. There was nickel deals, there was refining deals, there was lithium deals. Can you be diversified in the battery metal space since the chemistry and refining can be so specialized, Neal?
You know, obviously we believe we can. We believe that you can't do it on your own, and therefore the type of arrangements that you enter into are not going to be outright acquisitions. Our success in the PGM business has been being more involved in the downstream side of the business. Now, that doesn't mean we build cars, but we work very closely with the end users, which is different to many of the other PGM producers. So in the battery metal space, chemistry is a very material part of those businesses, but that's also why you see us entering into relationships where we have exposure, but we don't have control. We're a learning organization, and we are establishing ourselves in ecosystems which we believe will be stable, like in Europe and North America, and we are being part of the solution of providing metals and sustainability to those regions to address climate change. So we've stepped up to the plate in a very different sort of way.
Help me out, Neal. So when I'm covering this space, I see a lot of parallels, or your competitors. They seem to be mostly the diversified Australian miners. They just seem to be, Australian companies just seem to be more aggressive in this space, Neal.
Yeah, so I think the difference between us and I wouldn't say just Australian companies, but let's say single commodity companies in this space, is they are purely contract miners. So they mine the product and they sell it at arm's length. Most of them do that. We have made a very conscious decision not to be a contract miner. We want, as I've said, to have more exposure down the value chain and to build up relationships with the end users rather than having these completely commercial arm's length type of relationships. So it is a different approach, but also, we still suffer the consequences of having the majority of our earnings coming out of South Africa. So we have this discount. We can't use our equity like they use their equity, because generally our equity trades at a larger discount or a smaller premium than most. So we find it difficult to be aggressive. And listen, we are not focused on growing for the sake of growth. It's got to be value accretive for our shareholders. So we try and maintain that discipline and compete. What we do have, though, which many of these other companies don't, we have a large balance sheet. We're a large company. We have very significant technical expertise. And when you start talking batteries, hydrometallurgy, that is right down our street in terms of areas of competence in the processing of PGMs.
North American nickel development companies see a real choke point with processing. What's a major missing piece for energy transition, Neal?
Yeah, and it's a good question. So we bought a nickel refinery in France called Sandouville, and Sandouville was established originally to provide high purity nickel, essentially for the aerospace industry. And I must tell you that we went into it with eyes wide open. That is not the precursors to battery metals. Battery metals require different forms of nickel, and of course you get many different forms of resources. So nickel processing is complex. We understand it, and we have a program to actually convert our Sandouville refinery into producing nickel sulfate preliminary for battery production, rather than a high purity nickel, which currently gets taken and then dissolved back into nickel so you can produce nickel sulfate somewhere else. So nickel processing is extremely complex depending on the source of your material. You've got the laterite nickels, you've got the nickel sulfides, but we do understand it well, and we bought Sandouville we bought it in its current form, but with the view to converting it into a nickel refinery for battery metal precursors.
Lastly, Neal, a lot of investors stay out of battery metals altogether just because of either the complexity or just worries about substitution. They go as far as copper. What would you say?
Yeah, listen, I love copper. Copper is a great commodity, and it's simple, it's well understood, easy to understand supply and demand. However, I think that the opportunity to build a green metals company is what attracts us to the battery metals. When you combine our very large PGM base, which at the moment underpins cleaning the air in autocats, but they are green metals, ultimately underpinning the hydrogen economy, and you combine it with a material business somewhere in the future in battery metals, which is more complex, it's going to be difficult to achieve. We understand that, but you have a client. You are or we are establishing a climate change resilient business that has a unique combination of metals that will put us in a class of its own. It's not going to be easy, but we understand the combination of those metals makes us unique. We're not trying to be a Rio. We're not trying to be a BHP. We're not generally diversifying. We have a niche market, which is green metals that are going to make an impact on climate change.
Neal, thanks for speaking with Kitco.
It's my pleasure.
He's Neal Froneman, CEO of Sibanye-Stillwater. My name is Michael McRae, and you're watching Kitco Mining.